Good morning, staffers. In our financial statement series of understanding staffing financials, today we are going to deep dive into the balance sheet. The balance sheet meaning the picture of where we stand today, our statement of position. And in particular, we're going to deep dive into Adecco's balance sheet to find out where they stand, what they've been doing, and are they going to be able to compete at the same level that they have been competing in. So stay tuned. Here we go. So, in this video, we're going to be talking about the balance sheet and really how to understand a balance sheet, how to read a balance sheet, and how to also understand Adecco's balance sheet to find out what this really means, because there's some, again, golden nuggets that we can apply in our business, right? But before I go, I want to take this moment. I don't want you to miss any videos. There's a little red button at the bottom of your screen that says subscribe. So go ahead now and click that subscribe button so you don't miss a beat and you get all the upcoming videos that we're going to put out. So here is our balance sheet for Adecco. And again, this is part of that 2018 financial statements that I pulled down from Adecco's website. It's publicly available because they are a publicly traded company, and you can actually pull this for yourself. And this is Adecco's balance sheet for that time. And what a balance sheet is, it's a picture. It's a picture of what a company looked like on that particular day. It's how much cash the company had, it's how much debt the company had, how much net worth the company had, and on that particular day. And in this case, it's December 31st, 2018, and also December 31st, 2017 for Adecco. And the numbers can change. It can change drastically on January 1st than what it was the day before, because they could pay off debt, they could get a huge collection, a huge sale, they could sell a whole bunch of assets. It can look very different from one day to the next. But on this particular day, this is what the company looked like. This was their picture snapshot, permanent snap in time of what Adecco looked like on December 31st, 2018 and December 31st, 2017. Now, one thing I do want to point out, because Adecco is a European-based company, the financial statements are in euros. So not in US dollars, but in euros. And they're also in millions. So when you see that number 652, that's not $652. That is $652 million. So again, large company, a great company to dissect and understand. And really, I want to go ahead and point this out. Now, there are three major components of a balance sheet. There are the assets on the balance sheet. The assets are things that the company owns, things like cash, investments, accounts receivable, meaning that money that's due to the company from the customers. There's fixed assets, things that the company has purchased that is generating revenue over time, like furniture, like office equipment, like technology. Those are all assets here. And in Adecco's case, they had at December 31st, 2018, 9,718,000 euros in assets. The next major component of a balance sheet is the liabilities. And the liabilities are debt. Those are things that a company owns, right? So in this case, Adecco had $6 billion and $129 million in liabilities. So you can see that almost 2/3 of their assets were financed at this particular point, is what it looks like here. And you have your current liabilities versus your long-term. Your current liabilities are things that are going to be due rather quickly. So most likely due in the next 30 days or a year usually is a current liability. So you got your accounts payable. They had $793 million that's due. They had some accrued wages that they have to pay. Some payroll taxes that are due in the near future, probably next pay period of 1,341 euro. Some accrued sales tax, depending on, I guess, the type of work that they're doing. And they also had some long-term debt. They had some long-term debt related to debt that they acquired as a part of either acquiring assets or being in their business. So their total debt was 6,129,000,000 euro. They also had equity meaning that this is the part of the business that they own outright, right? So that's going to be like their stock, their additional paid in capital, their retained earnings that's been accumulated over time. And they've got $3,407,000,000 in retained earnings. So they've got total equity of $3,581,000,000. So what I'm seeing here is they actually have more debt than they do equity. So what this means that December 31st was that Adecco had um, their assets were mostly being financed through their debt. Their business was mostly being financed through their debt, and they only had 3,581,000,000 in terms of equity. So, one thing I do want to point out is that the assets equal the liabilities plus the equity. So, if you got total assets of 9,718,000,000 euro, your liabilities plus your equity should equal the same amount. So they've got 7,718,000,000 billion euros in terms of liabilities with equity to match those assets. Because that, in an accounting equation, the assets always equals your liabilities plus your equity. So one thing that I'm seeing when I'm looking at Adecco's balance sheet that is a little concerning, that I would probably want to dig a little bit further and really, really read MD&A, which is the management discussion analysis, to find out exactly what's going on, or really dig into these financials is, look, I am seeing a big decrease in cash, right? In 2017, at end of year, I had $958 million, but in 2018, I had lost about almost $300 million of my cash. So a significant decrease in cash that's happening here on Adecco's financial statement side. And it's resulting in also a decrease in total current assets. So I have less means to pay my current debt because my cash is going down. And we're going to dig a little bit further to find out what happened to their cash when we get to the statement of cash flows and see how that works together. But that's one of the things that I would notice when I'm looking at that. The other thing that I'm seeing is that they did have an increase though in assets. So their assets, it looks like it's almost gone up about 30%, I would say. In 2017, it was 198 million. By December 2018, it was 282 million. So from 17 to 18, I did have an increase about 30%. So it looks like they're investing in assets is what's going on in Adecco. And even more interesting, the intangible assets have gone up. So intangible assets, meaning that in 2017 was 367 million, now it's 426 million. So they're investing in goodwill. It seems like they're maybe buying some divisions. So again, it's going back to the MD&A and going and cash flow statement, go, what exactly did they buy in order to generate that? And even more, how did that pan out for them? What does the income statement say? Because it's obviously been a sacrifice in cash that they thought that they needed to purchase these assets. What's actually going on here is what the statement would drive me to ask. The other thing that I see in Adecco is when I look at debt, total liabilities between 17 and 18, I see that it actually went down. My debt went down by about $200 million, right? It was $6,308 million, and now it's in 2018 was $6,129 million. So it's gone down by about $200,000. Did I take my cash here? Did Adecco take its cash and maybe pay off some debt? Maybe that was a smart decision that was going on. So again, it's just looking at the balance sheet as a picture and seeing exactly what does it mean, what is going on in the statement, and really using it in conjunction with the other statements to find out the whole story, the whole strategy of what particularly happened between 2017 and 2018. What if they have a decrease in cash? They're obviously purchasing assets, they're decreasing debt, but now the question is why? And we're going to go into that in our next videos.